Greetings. In this video, let's take a look at stock breakouts we should try and avoid. But first, I greet you in the love light of the one infinite creator. So, I've been doing breakouts for paid clients for almost 22 years straight, full time. So, I've been knee deep in the breakout game. So sometimes there come some situations like this one here. There was a stock here a couple of weeks ago that was looking like a very nice breakout here. This is the weekly, 2-year weekly. So we had this breakout here. And so I sat there and had to decide whether this was good enough for my paid clients as a breakout alert. But I'll tell you why I chose not to send a breakout alert for this stock. So something about the chart was disturbing me. So I'll get straight to the point. And it's this drop here. Now this is happening in early January of 2025. So this breakout is in early January of 2025. But when I look back here, I was seeing this big drop here. Huge reversal candle here. That is in, again, 2024. Oh, and by the way, if we take a look at the 3-year monthly chart, we can see that the stock did meet the minimum requirements. So there's no question about the minimum requirements were being met here. We have your price moving to breakout levels. We have our RSI moving to 3-year highs. In this case was all-time highs. So the RSI was good. We can see that our MACDs were also moving to 3-year highs. In this case, they were moving to all-time highs. I'll show you in a little bit. So everything met the minimum requirements for the ultimate Muade breakout. So what I was talking about here is you can see what I wasn't excited about was this reversal here, this bar here that really lost all the gains for that month. This is a monthly chart. And also this action here. In fact, if we go back, let's go back here and take a look at all data and see what we have. Let's go back, see whether we get all data. You can see actually the big issue I had with the stock was this behavior. It gave up all the gains here and subsequently had this big drop. So it didn't seem to me that the stock would sustain its breakout. Now, if I go back to the current chart, you'll see what I mean is now we can take a look at the breakout I was talking about previously that I avoided for paid clients is because we can see what has happened since. So the previous breakout I was showing you was this week here. So the stock did go up for about couple of weeks, but you can see ultimately we have this big drop, and this is what I was not wanting to experience. So what I'm saying here is sometimes when you look back at the stock's history and just see how it behaves, if the stock doesn't have an ability of holding on to gains, be very careful. Now let me show you a recent one where I believe I made a mistake. So let's take a look at a stock here, SERV. Serve Robotics, and we can see here setting up very nicely a couple of weeks ago. So we can see this is the weekly closing high, and the stock looked like it was forming a nice base right here, nice tight base. It looked like it was about to break out. So I gave out a couple of breakout alerts here in January and one in the first couple of days of February of 2025. As you can see here, so this is my website here, and that's the stock. You can see a couple of breakouts in January and one on February 7th. Now it looked like this had an opportunity, if it could clear this range, looked like there was an opportunity here for this stock to have a nice run based on the fact that it met the minimum requirements at the time. Now, this is as of February 7th. Now let's take a look at the current chart. See what happened here now. Here in the last 2 weeks or so, you can see a huge reversal. In fact, at some point the stock was breaking out, but you can see what happened here. There has been a sharp rejection. Now, of course, the market itself is pulling back in this time frame, but that's besides the point. Stocks failing to break out here. And if I go to the daily, let's go to the daily here. You can see there was a big gap down right here, huge gap down here. It closed here, but ended up opening the next day from here, opened right here. So closed at about 23, opened at about 14. So big gap down after that breakout attempt. The issue that I think that I might have neglected was the following. Take a look at the behavior of the stock here when it IPO'd. Huge rejection point there. And then take a look at what happens this following week. So I should have put this in consideration. And then also take a look at this attempt to move higher here. All of this loss of gains right here, followed by a big drop. So it's not only that you didn't hold on to the gains here, you are followed by a big multi-week drop. You didn't hold on to the gains here, you followed with a big multi-week drop. That tells me that institutions are not holding or they're not supporting the stock. Now, there's always the risk that a stock can gap down. There's always the risk that a stock can fail to sustain a breakout. So that's not unusual, but we can also save ourselves if we go and study how the stock has been behaving in the recent months, not what happened 5-10 years ago, But what has happened here? We can say this behavior here in this period was a couple months ago. And then even here was within the year. So within the last year or so, the stock has had these two big drops here and here. So by the time it's attempting to break out again here, I should have been very cautious and probably should have given this a big pass. But it's part of trading. Not all breakouts are going to work out. The point here is be on the lookout for stocks that have a history, and especially a recent history, of big reversals followed by big drops. So even after so many years of trading, almost 20 plus years, this still happens to me. I am Eric with Mother.com. I leave you as I found you, in the love light of the one infinite creator. Go forth rejoicing in the power and in the peace of the one creator. Adonai.